So it's March 2023. What's going on with the housing market? So it's actually March 15th. And the date is important because of last week with the SVB Bank situation, Signature Bank, and kind of the turmoil in the markets. It did create a little bit of uncertainty out there, but with the federal government coming in saying they were going to guarantee the deposits, kind of put a little bit of a floor underneath it. The good news for the housing market and how it affects it is that basically interest rates have dropped. The yield on the 10-year treasury is down at about 3.5 ballpark right now, which means rates have come down probably about 6.25, 6.5 versus the 7 that we were looking at just about a week ago. So that's good news for us on the housing market. Banks are still lending. There are still environments out there where you're seeing those QM products, those no income verification with 20, 25% down. Investor loans are still there. So big part of what's going on with the market is still that lack of supply out there. So let's talk a little bit about that. When you look at rates compared to the 10-year treasury, the spread is a little bit wider now than what it was in the past, but it's still following the path of that 10-year treasury. And when we see that yield on the 10-year treasury come down, we are seeing mortgage rates come down. So we'll probably hover in this ballpark for a little bit. Sam Catter, chief economist at Freddie Mac, said the economy is showing signs of resilience. Mainly due to customer spending, the rates are increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist. So we have a Fed meeting coming up in another week or so, and we'll see what they end up doing after all the stuff that's happened in the past week. But we are still seeing inflation. Their goal is to get it to 2%. I think right now it's probably about 6%, a little bit better than what it was last month, but we're still seeing this. So I think that the pressures will still be on to kind of bring the economy a little bit slower down. But the housing market is remaining strong, especially as we come into the spring months. The 30-year treasury rate, like we talked about, the yield between the 10-year treasury and the 30-year mortgage is about 2.756% is what we're looking at right now, the spread between the two. Sometimes it's going to be a little more, a little less, and that will affect the rates as well. One of the bigger things that we have that's causing a lot of this kind of uncertainty in the markets is our lack of supply. So, and this is seen both locally and nationally. Homes weren't built for a while after the Great Recession, so we saw that lagging there. But a lot of people that have refinanced are staying in their home. Sometimes it doesn't make sense to make a move. So you're seeing that lack of inventory come out with still seeing the bidding wars. And anytime we do see the interest rates drop a little bit, as long as nothing catastrophic is going on in the market, we're going to see that demand tick up a little bit. So where I thought we'd probably be a little flat this year, honestly, because of the lack of supply, I think we're going to see numbers up, price valuations up a little bit, maybe 2.5% to 5%. There was a survey that was put out, I think, on average of what the difference from the peak of where prices are today. And I think it's about an average about 2%, 2.25% down from the peak, which is probably about right nationally. I think locally we've seen kind of that stabilization, a little bit here or there, like I talked about a basketball approach. If the property is renovated, you're seeing property values increase. If the property needs work or backs a highway or has some type of flaw like small rooms, you're seeing the prices drop a little bit, kind of creating that dribbling effect. So it still is really a good time to sell. Values have stabilized with a little bit on the uptick trend. Is it a good time to buy? I personally do think that it's a good time to buy. Even rates still at 6.5 are not bad at all. I bought my first home in 2006 and, rates were 6.5 and that was the best real estate market on the face of the planet. And I know a lot of people have reminded me that rates were 12 and 18% at some point, throughout our history as well. But, if you're going to be in a home for the next 5, 10 years, and even if properties dip a little bit, so what? 401ks are going to dip a little bit. Doesn't mean you shouldn't put money in your retirement accounts. If you look at what the prices of rent are versus owning a home, it's definitely a good time to buy a property. And where the averages are coming out nationally, what things are being projected is we're probably going to see anywhere from 3 to 5% a year on average growth, over the next 5 years. And if you look at, the median average is probably going to be anywhere from say $50,000 to $75,000 5 years from now. So if you picked up that equity plus paid off some of the interest on your mortgage, you're in a much better position 5 years, from now than where you are today. And those lending programs are still out there. So overall, I do see a strong housing market. I see some stability. I'd like to see a little bit more inventory out there, but overall, we're doing all right. As the spring comes, one of these days we're going to get that, nice warm weather. I think it's coming right around the corner as we head into April. And we'll see a little bit more inventory. A lot more people have been talking about getting their homes on the market in the last couple of weeks than what we saw at the beginning of the year. So expect to see a little bit more inventory both on the co-op condo side and also the single and multifamily side. So If you have any questions, want to see what the prices look like for your home, want to discuss, whether you should do some renovations to your property or not, how to maximize the potential of your property, or just want to say hi, feel free to reach out, click on the links below, or give me a call.